Hi, this is Lex, and welcome to the Fintech Blueprint. It's your podcast about fintech, decentralized finance, digital banking, investing, robo-advice, artificial intelligence, and all the other frontier technology that is transforming financial services. To get more content, like an illustrated transcript of this conversation in your inbox, subscribe at fintechblueprint.com. So without further delay, let's jump into today's episode. Hi, everybody, and welcome to today's FinTech conversation. I'm really excited to have with us today Cynthia Kleinbaum-Milner, who is the Chief Marketing Officer at MoneyLion, one of the really interesting FinTech companies that went public over the last few years and has helped millions of people. And so I'm excited to talk about MoneyLion as well as Cynthia's path to her role. With that, Cynthia, welcome to the conversation.
Thank you, Lex. Thank you for having me.
My pleasure. So let's start at the beginning of your career. What were some of the key experiences that you've had that have shaped your outlook on the world?
Sure. Well, I grew up in Mexico City, so that shaped my outlook of the world, having grown in a developing country. I also grew up in the Jewish community in Mexico, which I think made me an outsider everywhere I go. To me, that state of being an outsider has made me a very curious person because I never consider myself that I belong. I always keep my mindset open to understand what the rest of the world is experiencing because I'm usually different than most of those around me. I took my first job at Nestle in Mexico doing basically brand management work because I've been fascinated always by human behavior and how we can communicate with each other in a way that we can move people to do something. In that case, it was to buy chocolate, which now looking back, it didn't feel great, but I learned a lot. And if you are a marketer and you want to learn how to build brands, you want to go to a CPG, and Nestle was a great school. But I wanted to make a bigger impact in the world, not just have an impact in those that were right next to me, close to me. And I wanted to have an impact on a more global scale. So I went to HBS, and of course I got the typical things that you would expect from a program at Harvard, the network and the learning and the career opportunities. But what gave me the most, the real transformation to me happened with the diversity of thought, with the fact that you're forced to listen to people that think very, very different from you because you're in a group of very smart people that disagree with your perspective and you're kind of forced to try to put yourself in the shoes of others. So I learned a ton at HBS, and then I realized that I didn't know much. I arrived to HBS thinking I know everything from my time at Nestle, and I left HBS thinking I don't know anything. So I took a job at Boston Consulting Group, worked in many different industries to really understand how different industries work, how different companies make money, decide is CPG, is marketing where I want to be. I decided that marketing was where I wanted to be, but I also realized I became obsolete in those years that I was out of the marketing function because this was in 2011, and by then the marketing function had done a 180 from brand marketing, traditional channels, 50% of your spend, you don't know if it's working or not, you just don't know which 50%, to performance marketing, and everything is measured, and the digital channels that didn't exist 10 years before. So I had to reinvent myself.
Marketing, brand marketing, and brand. Can you just open up the difference between the discipline of marketing, what's that for? Then what is a brand? And then I think the context of, the journey you're talking about from brand marketing to much more digital and quantitative will make even more sense.
Historically, marketing as a function was the practice of building a brand, which is basically a name that you give a product to differentiate from your competitors. And in many of those cases, your competitors are selling exactly the same that you're selling. In the case of Nestle, for example, I was selling chocolate powder and my competitor was selling chocolate powder. You create a brand so you can differentiate your chocolate powder and communicate with the audience at a more emotional level to compel to not what you're selling, but what you're doing for them, what consuming your product is going to do for their lives. And that's how we think in marketing. We try to create a message, to build a message that goes as deep as you can in the customer insight, that is not just about your product, but it's about the customer life. And then there was a function of buying media. Historically, you could buy media in mass channels, and you would select based on your best understanding of what your customers do on a day-to-day basis, where they're spending their time. You would try to catch them there. So in my case, I was selling products for kids, so I knew they're probably watching cartoons, so I'm going to put an ad on the Cartoon Network. And if you're selling something for white men in America, you're going to try to advertise during football, Sunday night football, right? You were doing just your best guess of targeting. When digital marketing as a function starts, and by digital marketing, I mean any advertising that happens online, something magical happened, which is you could select exactly the person that you wanted to target, and you could track all the way to purchase. So while before I could put an ad on the Cartoon Network and hope that I'm going to send somebody to the store and buy my product, now you could send them to your digital store to buy your product and say specifically what effect your ad had. You could measure the return on ad spend at a very granular level. It's a different skill set that you need as a marketer. You have to be much more data driven, much more quantitative. You have to be more comfortable with understanding how technology works, how tech stacks are built. And that's not something that you learn when you start your career as a brand marketer. That's what happened to me. I wanted to learn performance marketing, digital marketing, but I didn't have the skill set. Today, something even better is happening because in the past 20 years, there was that shift from brand marketing to performance marketing. And now everybody's realizing that everything is marketing. We can't be developing talent as you are either a performance marketer or a brand marketer. You can use performance and digital channels to build brand marketing. So there's this new wave of treating marketing back as in the beginning, like it's one function, and digital marketing, performance marketing, it's one lever, but you should still use the traditionally successful efforts to build your brand, like TV, out of home, partnerships, which are channels you can't really target, you can't really track the effect immediately, but you can track the effect in the long term, and they're indispensable to build a valuable brand in the future.
You've practiced looking at different industries while at BCG and then went deeper into industry to apply those lessons. Which industries did you focus on? And maybe if you could share kind of some of the personas that you were targeting with the different products you were engaged with.
After BCG, I went to work at Gilt Groupe. I don't know if you're familiar with it, but I'm sure if there's any woman in their 30s, 40s, they know what it is. It was the original flash sale site in New York or in the US. The persona here was the fashionista that wanted to get access to fashion, to luxury items, but didn't want to pay the price tag, and was willing to go every day at noon and hit refresh on the browser and get the best items that were available every single day. So I was targeting women back then. Then I went to work at Bonobos, which was the first digitally native vertical brand, the first clothing brand that was started online and then moved offline. And in that case, I was targeting men in urban areas. Those were the type of customers that were buying from Bonobos. in particular, men who were struggling to find their fit in other brands. There was this insight that it was very hard for men to buy pants that fit, that pants were either too baggy or too tight, that they had to compromise. And what Bonobos created was a range of fits that instead of being about 11 options that you would have in a J. Crew or in a Express, we had 172 combinations. So really anybody could find their fit. And it was very aligned with the brand promise of enabling you to fit in the world. Like you will find your fit and you can wear them any way you want. So there was a really good connection between the product and the brand positioning. And that took me to Walmart. So as you can see, I've been selling to very different personas and very different products. At Walmart, I had many responsibilities in the time that I was there, from building the marketing team for the consumables business when we were launching Walmart.com, selling toilet paper and baby food and everything you can buy in a Walmart store, but online. And then I started building and rebuilding the teams that were selling the omni-channel solutions of Walmart. What we called omni-channel at Walmart were experiences that started on the digital space, but that had also a physical component. Like the online grocery business, we were the largest online grocery business during COVID. Of course, it grew a lot because people started to feel more comfortable buying online their groceries. I also led the team that marketed the mobile app and the launch of Walmart Plus, the membership program, like meant to compete with the Amazon Prime, obviously. The last business that I also supported was the money business, the financial services business. And that's kind of what made me be super interested in financial services as a vehicle of equality in the US. Because if you think about the promise of Walmart promises that you're going to save money so you can live better. That's the tagline, right? Save money, live better. And there's two ways you can save money. You can you can have more money in your pocket. You can either make more money or you can make better decisions with your money. That's what MoneyLion helps you do. It actually makes you make more money or make better decisions with your money. And I became really passionate about this idea of financial inclusion and financial literacy as a way to help people live better.
I'd love to get into MoneyLion, but before we open it up, just one more question around Walmart and the marketing practice. It's such an interesting business because it's very large and it has reach into people's lives in multiple different verticals and lots of different businesses, right? From retail to food to finance and many, many others. Did each division or part of that do their own targeting? I know the kind of the marketing motion from the perspective of like a key product where you're trying to optimize one product against a customer type. But when you have a whole selection of things that could potentially fit to somebody, like what are the mechanics of wrapping around customers? Or is it that each product line sort of does its own discrete activities?
When I was there, that's a transformation that was happening, and I can see that it's more advanced now, because when I was there, we were building the CDP of Walmart. If you think about how important a CDP is, I don't know actually if everybody knows what a CDP, but it's a customer data platform where you put all the information of your customers in. And when I was at Walmart, and I imagine that's still the case, about 50% of the revenue in the stores was happening with cash. So effectively, you're losing the data of 50% of the revenue in your stores. You don't know who is making those purchases. And Walmart was really focused on capturing that data by creating digital solutions that kind of incentivized the store customer to help us track the purchase, even if they were going to pay with cash, which is really hard, right? We had to have rewards programs, and the app had to to be very good for somebody that was there to buy something with paying with like coins or bills and then still use their phone, so we could track the purchase and create that really comprehensive view of the customer. So Walmart was building that CDP, which is meant to power the experience of every customer in the website and app, and the next best action model for lifecycle marketing. That was the transformation that was happening. I feel like Walmart was sitting on a gold mine, but it wasn't set up to capitalize it because the CDP didn't exist. So they actually couldn't understand that the same person that went to the store yesterday to buy baby food was buying pet food online because it's too hard to bring a huge bag of pet food in the car. So they were buying it online. Like creating that full persona was happening when I was there. So that was the goal and that was happening, but I can't promise that it's perfect yet. I think it's a pretty big undertaking for Walmart to do it. There's too many platforms where the customer information lives, and some of them actually will never be able to be in one platform. There's a big healthcare business in Walmart, and I think there's a lot of regulations, and even the financial services one. There's a lot of regulations around healthcare and financial services that will prevent a full picture of the customer, but whatever is legally allowed, it's happening very rapidly.
Fascinating stuff. And I think that leads us into kind of digital first businesses that do have this capability. And, MoneyLion being one of the fintech digital first businesses that are focused on lending, that have elements of neobanking to them. Can you talk about kind of the moment at which you joined the company and what is it that the company did when you joined it?
The company, the stage at which MoneyLion it was a pivotal moment. MoneyLion had acquired two companies a few months before I arrived. One of them was back then called Even Financial. Now it's called Engine by MoneyLion. And Engine is the next generation or the programmatic marketplace for financial products. Basically, if you are a publisher or you have a financial product, you can use the API or the technology of Engine to match either with customers or you can match products with your customers without having to build relationships with thousands of partners. It's like it's magic. And then the other company, which is less obvious what we acquired it, but now people are starting to understand, it's a creative studio. It's a company called Malka. The company creates high quality content that it's either we have like podcasts, influencer content, and every type of video content available. We do it using technology and using data to build those assets. So when I joined at this pivotal moment, MoneyLion was incorporating the technology of Engine by MoneyLion within the app and incorporating the content from the creative studio within the app. And now you can see it. If you saw our app a year and a half ago, you could probably slap a different brand and you would think that's the same. It's the same company. Many of our competitors look just like us. We now look like nothing in the market. When you arrive to MoneyLion, when you open the app, what you see is a feed of content that gives you education to make the best financial decisions. And we know what you need at that moment because we have a very deep understanding of what is your financial situation every day. The financial situation of Americans, it's fluid. Today I may need money, tomorrow I may have money to invest. So we understand where you are in your journey and we give you the content that's gonna help you make a decision, the next decision that will help you get to what we call financial freedom or financial independence. The other thing that we have in our app, it's a comprehensive marketplace of every financial product you could possibly need to get to that financial independence, and that is powered by Engine by MoneyLion. One would not be able to to be useful without the other. If we have a discover feed, we call it the discover feed. If we have a feed with thousands of pieces of education, but then we don't have the financial products for you to act, it's like we are asking you to go and do the research outside. Like, let's say that you see a piece of content that says, there's this really good savings account that it would be great for you to open because you have your money on your checking account and it's giving you nothing. And then you have to leave the app and go to research and open an account somewhere else. That it's like putting distance between the moment that you learn and the moment that you act. And we know that people don't do that. That if you learn something online and you then have to take different steps to act on it, you're not going to do it. So we wanted to shorten the distance between learning something and acting on it, and everything is in our app.
If we rewind even kind of back from that, you started out saying like there was a lot of players in the space that looked very similar. I mean, what was the core value proposition of the app? Like, what does the app offer to somebody who downloads it?
A year and a half ago, we had a suite of first-party products that were very innovative when they launched. And the way that we describe them is these are, and they still exist, they are premium affordable financial products. What do I mean by premium affordable? These are products that wealthy people used to get access to for decades. But because the financial industry was set up in a way that the incentives were to serve the people with the biggest bank account, if you didn't have a lot of money, you couldn't have a managed wealth account, right? Like nobody was going to manage your money if you had very little money to invest in the stock market. So we have a wealth account that has no fees, that you can start with really low minimums. Or, for example, if you have a lot of money, a lot of people will give you a cash advance and not charge you an interest rate, right? But if you don't have a lot of money, try to find that. Well, we launched InstaCash. Or if you wanted a bank account, there's a lot. If you would go to a traditional bank account, you would sometimes end up with overdraft fees. So we created a safety net connecting InstaCash with your raw money account. So if you needed cash to bridge a gap, we could give you that cash and you didn't have to have overdraft fees. So these are all premium products that were historically only available for people with a lot of money, and we made them available for everyone. And we were able to do it because, number one, we don't have branches, so we don't have the big expenses that the traditional banking industry has. But more importantly, number two, we were using the newest technology. We don't have the legacy technology that a traditional bank has to kind of update and connect with new tools. We started being a technology company, and using technology, we are able to serve at a much lower cost. We even are able to acquire customers at a much lower cost. So you can see that like our marketing spend is much lower than our competitors because our technology enables that.
For me, it's a really interesting story that is a bit difficult to understand. You know, when I look through the investor relations presentations that are out there publicly, I think the market has pretty significantly misunderstood the company. If you look at the growth in the number of customers in 2021, towards the end of the year, it's something like 3 million. And now it's something like almost 10 million, adding 2 million per quarter. You know, if you look at the revenue of the company, it's grown from something like 80 million in 2020 to an annualized number of about 400 million now. So it's pretty powerful growth story. And like you say, there's a moment of differentiation going from sort of first party products. I remember there was a credit builder product that
we still have it. Yeah.
Yeah. But really opening up to kind of the broad network of embedded finance. So at the same time, obviously, there's been a crash in fintech overall and in the valuations of the fintech multiples. You've had pretty interesting organic growth, but like everyone else in the public fintech market, a fairly difficult time in terms of the valuation. I wonder how to think about that and, how to also understand maybe the changing nature of the company. Like, did you find a better revenue source? Is it more like a Credit Karma or a Lending Tree rather than a Revolut or a Monzo these days? Like, how should we make sense of these data points?
You're spot on. We believe that we have a great story and that we are undervalued, but we also believe that we have to show consistency in those results, right? A year ago, you could just pump marketing dollars and show revenue growth, and that was all that mattered. And we are in a journey to prove that we actually have a profitable business and that we are very disciplined with our spend. And doing it quarters or 2 quarters is probably not going to cut it. So we are patient in that sense, that we're confident that when investors realize that this is not 1 quarter saving money, this is our business model. We have a very low cost to acquire customers because of Engine, and we have a very engaged customer base because of the content, that they're going to realize that it's undervalued. It is a change in business model, and it's a change on what's the KPI that we optimize for. I think we are a little bit misunderstood because we are different than others. It's very easy to measure some of our competitors against each other because what they do is they offer a cash advance or a banking product. So you can measure how many banking accounts are there in each of them and say, okay, this one is better than this other one. But you can't really compare us in that sense, because for us, the name of the game is engagement. It's having people come back over and over again. It's becoming part of their daily routine. We want people to come to MoneyLion every single day instead of going to their social media account that maybe makes them feel bad about themselves. Come and consume financial literacy content that will empower you and enable you, and it's going to then make you want to come back. And I think the investors, it's a shift in the mindset of the investors, when instead of measuring us by bank accounts, they measure us by MAU, monthly active usage, or daily active usage, and repeat rate, and how many products a customer is taking. It's a little bit of a different mindset, and I think the investors are catching up to that. And you can see some of the analysts are getting it, but it's early on. Not all the analysts are getting what we're doing, but we're pretty sure that what we're doing is working, and we're sticking with it.
When I use the app now and I'm engaging with financial literacy content and I check it daily, what does that mean? Is that videos? Is that like PFM where I see all my stuff over time? Like, what has that changed to? And thereafter, what are the unit economics for a person engaging with that product? Like, how is every user generating value for you, and what does that look like?
The content comes in very different forms. We have short form content that comes mostly from financial, I guess they're called finfluencers, from content creators. And they create 20, 30-second little videos with money tips. Then there is longer form, more like Money 101, more basic type of content that we provide as playlists. Then there's PFM type of calculators, surveys that you fill out and they take you somewhere depending on what you filled out. So the content comes in many forms. And then the latest one that we launched recently is the ability to comment and have conversations with peers. So if you actually have a question, you want to take an action, and you need some feedback from the community, you can do that. And we consider that content too. Then almost every piece of content, wherever is relevant, has a call to action, has a button that takes you to either learn more or take a product. The products are not all, it's not like we're selling everyone, just like pushing things. A lot of the products that we have are products that will help them save money or make money. We have a relationship with a ZenDrive where you can lower the cost of your insurance for your auto insurance. So if you are engaging with content about how to lower your expenses with auto insurance, you're for sure going to be put in this journey, lifecycle journey and content journey that will explain to you how to use ZenDrive to lower your expenses. And then once we start seeing that you're lowering those expenses, we're going to feed that information back to you, because that reinforcement of you're making the right decisions, keep at it, it's very important, it's proven to work. And the daily interaction with the app, it's what drives the unit economics, because the likelihood of somebody using the content increases the likelihood of somebody taking a product. And that's how the unit economics work. You engage with the content, you take a product, we get to know you better, so there's more relevancy on the next content and the next product that we're going to put in front of you. And you feel like we know you and we have your back and we're doing this like it's a service for you. We want to help you. We want to help you reach that financial freedom, financial independence. So that's how the flywheel works.
How does somebody come across the content? The details of how you build these businesses is really kind of key, right? Like you could build a financial business that converts into media, or you could build a media business that converts into financial products. Is it that the financial education content, this is the video platform where I can get it, and so people share those videos and that's how they pull into the MoneyLion app? Or is it that most likely I'm searching for credit builder and that gets me into the MoneyLion app, but when I get in there, there's a bunch of things for me to learn, so I click around and then I get into a habit of checking it out? Like, which are you leading with?
Yeah, well, it's actually in very active shifting. Right now, and historically, it's been that people come for a financial product, and as part of the journey to help them use that financial product, they get exposed to the content. That's when it becomes a media play. But because people are sharing that content with their community, and because our social media channels are becoming more and more popular, there is more people that are coming to consume content first. And that takes some time consuming content before they're ready to take a product. So it's very actively shifting, but it has historically been much more first take the product, then consume the content.
And then in terms of the economics of the business, I know there's a number of different revenue sources. I think I see 35% is coming from enterprises, which are third-party marketplaces, so folks that you work with, and then more than half coming from the consumer side, and interchange and membership fees and transaction fees and things of that nature. Is it still the case that kind of the $20 per month membership fee is the core economic driver? Is it that I come to the business and I subscribe and then everything is taken care of me, and I orient around that kind of Amazon Prime type subscription for the financial service?
Like philosophically, when we had to decide, do we want to be a membership company or a company with a membership? And we are a company with a membership. For those that want to engage like at a much deeper level, that want to manage their financial life closer, that want the best that MoneyLion has to offer and are willing to pay extra for that, we have a membership that's amazing, and it has things that are somewhat niche. Not everybody's going to want what we have in the membership. So the most of the customers engage with MoneyLion without being part of the membership, but the best customers of MoneyLion are part of our membership.
Got it. And so when you look at the company's revenue generation, sort of like what are in your mind the key ones?
The marketplace is growing, like the revenue share and the type of like relationships that we've brokered with our partners. That's what's going to be driving a lot of the growth for MoneyLion, because for us, we understand that first party products we have to fund them. So there's a different impact to our finances, to our cash position, if we have to fund cash advances or the credit building loan. And when we work with the marketplace partners, we become an affiliate. So it's a very positive type of relationship for us, and it's a very positive type of relationship for them, because we give them highly qualified customers that at a much lower CAC or cost to acquire than they can get somewhere else. So you're going to see that our marketplace revenue as a share of revenue is going to continue.
Got it. So that does really connect to the story of, companies like LendingTree and Credit Karma that have been able to be a little bit further up in the funnel, really understanding where attention is going and then being able to serve up kind of the best financial answer contextually. But I haven't heard of that model being deployed using video on a mobile app. So it sounds like that's the innovation there.
Exactly, because if you think about like Gen Z, I mean, they're digitally native, right? They're on their phone all the time. They want instant gratification. They want to learn something and do something. But then they want to be able to trust the source, and the trust in peer-to-peer sharing is to the roof. They want to learn from somebody that looks like them, that is going through something similar to them. So we are not going to put a financial advisor that speaks in a language that you can't understand, that dresses in a way that you can't understand, to tell you what you're supposed to do with your money. You are learning from someone that looks just like you, that is going through something just like you're going through. And then the next thing is, this generation wants the content to be interactive. I feel like my generation, we were okay with platforms that allowed us for passive interaction. Like, you didn't really interact. You were just consuming content and then doing your thing. And the newer generations are expecting to be interactive with the content, to be able to engage with content creators, with peers in the community. And that's the difference. We're building like the 3.0 version of everything you just said.
That makes a lot of sense and is a pretty clear direction. When you work with financial influencers, I'd love to learn more about that relationship. A few years back, I remember framing a point for a big conference of financial advisors, registered investment advisors in the US. I think it may have been 2017 or something like that, telling them that their biggest competition wasn't Goldman Sachs or Morgan Stanley, it was YouTube, and where people's attention was going. And it sounds like that's in large part the bet. One of the concerns is also that the information you get from a licensed financial professional is supposed to be of a higher quality. It's, they're held to a fiduciary standard, there's some particular training and so on. Whereas often the information you get on, let's say, crypto Twitter or FinTech is kind of much lower sophistication, and also sometimes exposes the people giving that advice to regulatory overhang, right? If they're talking about investing in index funds and some investment decision, they might incidentally be walking into what's considered investment advice. How have you navigated that line? And then both in terms of the quality of the people that are generating the content, as well as the regulatory issues of sort of the relationship between a viewer and a presenter?
The reason why consuming the content in the MoneyLion app it's a safer decision. It's because we curate. We don't just let anybody post content. We curate and we make sure that what comes in our platform is not financial advice. It's not even like we're not about stock picks. We're not gonna tell you this is a stock that you should be investing in, or this is a pretty big decision that you should be making. It's much more about PFM, the content that you see. Like if you think about our audience, it's not a sophisticated investor. And what I mean by they're not a sophisticated investor, it's we are teaching them basic things, money 101 first. First, they need to know the rules of how much you save before you start building investing, right? How much should you have in your retirement plan? How much should you have in your emergency fund before you decide to start investing in something that's a little bit more aggressive? So our customers are not yet looking for stock picks or something as risky as some of the things that you were talking about. But we do put every piece of content through a filter, and we have a legal team that is using the same lens that they use when we do any marketing campaign. If there's any marketers listening to this, they will know that the lawyer is the filter for every marketing message that goes out, we're using the same filter. So if I can't put something on an email that comes from MoneyLion, it's also not going to go out in the app if it comes from a financial influencer. So we don't let them speak as if they are giving advice. We're letting them show what they're doing with their own financial decisions and have the audience follow them. But it's pretty clean from how close to advice it is. It's not very controversial.
Cool. Makes sense. So what does the future hold for the company over the next few years? What is the focus?
The focus is becoming the go-to destination for anyone when they need to make a financial decision. And financial decisions are being made every single day. You can make micro financial decisions with your spend. So we have proven that our business model works. We are proving it. And now we need to scale because we have a very good foundation. We have a good business model that at the size where we are, it works. But if we can bring a lot more customers, then it's gonna, without increasing our fixed cost, that's what investors, I think, are gonna find very interesting when they start seeing the scale. So it's about scalability. We feel very good about where our product is today. There's innovation happening. Of course, this is the most innovative company I've ever worked at. So there's always new things that are launching in the app, but the purpose is the same. The mission is the same: empower our audience to reach financial independence by making the best financial decisions. And we're going to give them the content they need, the product they need. That's the future, doing that at scale.
Super interesting. And the path makes sense to me. And I'm excited to see what happens with the company next. If our audience wants to learn more about you or about MoneyLion, where should they go?
If they want to know more about MoneyLion, they should go to moneylion.com or open our app, download our app. If they want to know more about me, I'm on LinkedIn as Cynthia Kleinbaum Milner. And if they want to listen more from me, I also just launched a podcast, which is called A La Latina. We launched last week. If they want to listen to Latinas who are succeeding in corporate America on how they got there, it's the playbook to succeed being Latina in corporate America. That's where you can find me.
Awesome. That sounds fantastic. Thank you so much for joining us today.
Thank you so much, Lex.
Hi, everyone. That's it for this week's episode of the Fintech Blueprint. For more technical deep dives into all things fintech and decentralized finance, check out fintechblueprint.com and grab a free subscription to the newsletter. This is Lex, and I'll see you next time.